These three things must happen for XRP to reach 1,000 US dollars. Let's forget for a moment the price predictions of $5, $10, or even $50 for XRP. These numbers are, if we're honest, rather conservative estimates in our current financial system. Today is not about a simple price increase. We're talking about a price of 1,000 US dollars for XRP. Such a jump would no longer be a pure market movement. It would mean more of a complete fundamental revolution of the global financial system. To reach 1,000 US dollars, XRP would need a market cap of nearly $60 trillion. That's more than double the entire US economy. Mathematically speaking, it sounds completely absurd, almost impossible, and yet there's a theoretical thought experiment, a path that isn't based on growth, but on three massive system-changing events. This path requires the displacement of fiat currency, the overtaking of stablecoins, and an institutional takeover that dwarfs everything seen before. In this video today, we'll take a close look at everything, the three conditions that must be met for this. I'll show you what really has to happen so that the fantasy of 1,000 US dollars per XRP could become a reality. So stay tuned, it's going to be extremely exciting. The total transformation of the global financial system. The first and most important condition for an XRP price of over $1,000 is also the most radical. XRP would have to stop being just a bridge currency and instead become the fundamental infrastructure of global money. In other words, this means nothing less than the partial replacement of today's fiat systems. Imagine a world where the US dollar or the euro no longer has to be used for every international transaction, but instead XRP serves as a neutral global settlement asset. This scenario, of course, goes far beyond the current use of RippleNet for cross-border payments. It's about absorbing a market whose size is enormous. Worldwide, banks hold trillions of dollars in so-called Nostro or Vostro accounts just to settle international payments. This system is slow, expensive, ties up vast amounts of capital, and experts agree that it involves trillions of dollars of trapped liquidity. If XRP were to replace this outdated infrastructure, it could naturally release massive new capital instead of every bank having to maintain countless accounts in foreign currencies. They would simply hold XRP and exchange it for any currency in seconds as needed. This would of course create a massive sustained buying pressure on XRP that would go far beyond today's speculative demand. But that's only the beginning. For a price of 1,000 US dollars, XRP would not only have to outperform the old system, but also its modern competitors. For example, stablecoins and the central bank digital currencies, CBDCs. Stablecoins like Tether or USDC are efficient, but always tied to a single fiat currency in what is truly a globalized financial world where no single country has sole currency dominance. In that case, a neutral asset like XRP would naturally have a clear advantage. Even CBDCs, which are digital currencies issued by central banks, would be more like competitors in this scenario. Each CBDC would represent the interests of its own nation. XRP could serve as a neutral bridge between the various CBDC systems, but for a $1,000 target, it would have to be much more than that. It would have to be the primary medium between the different systems, with everything being settled through it. In plain English, the first condition is that XRP takes over the trillion-dollar market of Nostro and Vostro accounts, and at the same time establishes itself over all superior alternatives such as stablecoins as the indispensable neutral layer for CBDCs. That would create such a massive and fundamental demand that today's market capitalization would look like a rounding error by comparison. Without this total transformation, XRP reaching the 4-digit range remains pure fantasy. The irreversible institutional takeover. The second pillar for a $1,000 XRP is the complete and irreversible integration into the institutional financial world. We're not talking about a few hedge funds or whatever buying XRP. We're talking about a world where pension funds, insurance companies, and banks all see XRP as a permanent part of their balance sheets and operations. The first step on this path would be Spot XRP ETFs in the US. Such ETFs are the perfect entry point for big money. But unlike Bitcoin or Ethereum, they don't exist for XRP in the US yet. As of April this year, they would allow institutions to invest in XRP through regulated channels without having to hold the cryptocurrency themselves. If they are approved one day, inflows must grow from 0 to hundreds of billions to have a significant impact on the XRP price. The second and even more important step is the direct use of XRP by banks, thanks to growing legal clarity. Especially in Europe, of course. With the MiCA regulation, financial institutions can begin working with digital assets. And it's not just about holding XRP as an investment, but about using it as an operational tool. A key use case here is the tokenization of assets, meaning real-world assets, on the XRP Ledger. Reports suggest that major financial institutions like Deutsche Bank are exploring the network's use for settling tokenized assets. The value on the XRPL, meaning tokenized assets, is a growing but still manageable market. Ripple President Monica Long has repeatedly emphasized the enormous potential for institutional adoption. But the biggest breakthrough is still to come. For the $1,000 mark, this trend would have to literally explode. So imagine not just bonds, but also stocks, real estate, and other assets worth trillions of dollars being tokenized on the XRP ledger, traded with XRP as the settlement asset. Ripple itself is increasingly positioning the XRPL as financial infrastructure for institutions, while simultaneously promoting initiatives that would enable institutional clients to earn interest on their XRP holdings. So the second condition is institutional adoption on a scale that we can hardly imagine today. This means that XRP ETFs, if they come, would attract trillions in capital, and banks would use XRP directly for settlement and tokenizing assets on an absolutely massive scale. Global regulatory and political integration. The third and final condition, perhaps the most difficult of all, is complete, global, and above all, naturally supportive regulatory clarity. The uncertainty from the years-long lawsuit by the US Securities and Exchange Commission, the SEC, has massively depressed XRP's price, even though they won a significant partial victory. For a price of $1,000, simple tolerance is not enough here. It would require a proactive legal anchoring of XRP within the financial system. A crucial piece of the puzzle for this is legislation like the so-called Clarity Act in the US. The FIT21 Act was passed by the House of Representatives in May 2024, but is stuck in the Senate. These laws would finally clearly regulate the responsibilities of the SEC and CFTC and remove the last major hurdle for hesitant US investors. The passage of such laws is an absolute prerequisite, but even that would only be the beginning. The ultimate form of regulatory support would be the direct integration of XRP into the state financial infrastructure. Analysts are speculating about scenarios in which Ripple receives the so-called Fed master account. It would give the company direct access to the payment system of the US Federal Reserve and integrate XRP as a potentially official US bank payment system in the United States. Such a step would, of course, be an unprecedented level of political support and would naturally raise confidence in XRP to a completely new level. But that's only for the US. For a global asset like XRP, worldwide acceptance would, of course, have to occur. From MiCA regulation in Europe to clear frameworks in Asia and South America, the world would have to agree on a common, positive regulatory standard for XRP. So the third condition is a kind of regulatory clarity, which, given the utility for XRP, is naturally, let's say, an advantage. And here there must be clear, ultimately proactive laws, which in the best case even provide for integration into state payment systems. Without this global regulatory blessing, all that institutional capital will naturally stay away. That's a bit of the problem. Those were the three monumental pillars for a $1,000 XRP price. But what do you think now? Is the whole thing inevitable for the future? Is it the superior technology? Or is it simply madness? And you don't believe in it? Write your opinion in the comments about it. If you want to see such in-depth analyses more often in the future, then please subscribe to my channel and leave a like for the video. And then I'll link you to a new video here that is also extremely exciting. Thanks for watching and see you soon.